this module, we'll continue on with the non-refundable credits, lines 48 through 55 on the 1040. The Retirement Savings Contribution Credit involves the following. Taxpayers who save for retirement may qualify for a federal tax credit. The Retirement Savings Contribution Credit, or the Saver's Credit for short, is a federal tax credit designed to encourage low and modest income individuals to save for retirement. Taxpayers who contributed to a retirement plan or an IRA may be eligible for the non-refundable Retirement Savings Contribution Credit. The trigger can sometimes be taxpayers' Form W-2 for amounts that are listed in Box 12 and Box 14. The percentage of contributions received as a tax credit is 10, 20, or 50% depending on the amount of adjusted gross income. The Saver's Credit can be taken for contributions to a traditional IRA, a Roth IRA, or a 401k plan. To qualify for the Saver's Credit, the taxpayer must meet the income criteria, the taxpayer must contribute money to a retirement plan, the taxpayer cannot be a full-time student, the taxpayer has to be 18 or older, and the taxpayer cannot be claimed as a dependent on another return. For 2016, the income limits for the Saver's Credit depends on the filing status on the return. $30,750 or less for single, married filing separate, and qualifying widow or widower. $46,125 for head of household, and $61,500 if married filing jointly. The maximum credit that a taxpayer can claim phases out as income increases. The dollar amount of the Saver's Credit is $1,000 for unmarried filers and $2,000 for married filers. Many eligible taxpayers don't take advantage of this tax break, the Saver's Credit, because they don't know about it. A recent survey shows that only 12% of American workers with annual household incomes of less than $50,000 were aware of the Saver's Credit. How do we claim the Saver's Credit on the tax return? Well, to claim the credit, we need to fill out Form 8880, the Credit for Qualified Retirement Savings Contributions. The credit then transfers from the Form 8880 to line 51 of the Form 1040. Next, we'll go over the child tax credit. If the taxpayer has children who are under 17 at the end of the tax year, then he or she can claim the child tax credit for 2016 and get a $1,000 tax credit per child. The child must be under 17 for the entire year. The $1,000 child tax credit, which was created by the Bush tax cuts, was set to expire at the end of 2012. However, the fiscal cliff deal, signed on January the 3rd, 2013, extended the current child tax credit for the next 5 years. A qualifying child for the child tax credit is someone who meets the qualifying criteria of 6 tests. The age test. To qualify, a child must have been under age 17, age 16 or younger, at the end of the year. Second, the relationship test. To claim a child for purposes of the child tax credit, he or she must be a son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, or a descendant of any of these individuals. This includes a grandchild, a niece, or nephew. An adopted child is always treated as the taxpayer's own child. An adopted child includes a child lawfully placed with the taxpayer for legal adoption. Third, the support test. In order to claim a child for this credit, the child must not have provided more than half of his or her own support. Fourth, the dependent test. The taxpayer must claim the child as a dependent on the tax return. Fifth, the citizenship test. To meet the citizenship test, the child must be a U.S. citizen, U.S. national, or U.S. resident alien. Finally, the residence test. The child must have lived with the taxpayer for more than half of 2016. There are some limitations to the child tax credit. The credit is limited if the modified adjusted gross income is above a certain amount. The amount at which this phase-out begins varies depending on the filing status on the tax return. For married taxpayers filing a joint return, the phase-out begins at $110,000. For married taxpayers filing a separate return, the phase-out begins at $55,000. For all other taxpayers, the phase-out begins at $75,000. In addition, the child tax credit is generally limited by the amount of the income tax that you owe, as well as any alternative minimum tax that you owe. There is an additional child tax credit. If the amount of the child tax credit is greater than the amount of income tax owed, the taxpayer may be able to claim the additional child tax credit. Next, we'll move on to residential energy credits. This credit, calculated on Form 5695, it flows to line 53 on the 1040. There's a home energy tax credit, which was extended through December 31st, 2016. Again, energy credits are non-refundable, and it's a dollar-for-dollar drawdown on taxes owed on the return. Residential energy credits involve insulation, which is 10% of the cost, up to $500. This includes air sealing caulk, spray foam, house wrap, and weather stripping. For roofs, credit is 10% of the cost, up to $500 on metal roofs with appropriate coatings and asphalt roofs with cooling granules. For windows, the credit is 10% of the cost, up to $200, and the windows must be Energy Star qualified. The residential renewable energy tax credit was also renewed through December of 2016. This credit applies to geothermal heat pumps, small wind turbines, solar energy systems, and fuel cells. So what home energy sources qualify for the residential energy efficient property credit? Geothermal heat pumps, solar water heaters, solar panels, small wind turbines up to $4,000, and fuel cells up to $500 for each 0.5 kilowatt power capacity. There's also other credits found on Form 3800 or the General Business Credit Form. There are a number of separate credits that are specifically included by law in what is called the General Business Credit. In other words, the General Business Credit can be just one or more than one of the many available credits. Each separate credit is computed on a form for that particular credit. If you qualify for more than one of the credits that make up the General Business Credit, then you must file Form 3800 General Business Credit. If you claim only one credit, the Form 3800 is not required. The one credit is considered to be your General Business Credit. As with the other non-refundable credits, this credit is subject to a limitation based on the tax liability on the 1040. This is taken into account on the form that's used to compute the particular credit. Examples of some of the credits associated with Form 3800 are the Orphan Drug Credit, Form 8820, Biodiesel and Renewable Diesel Fuels, Form 8864, Distilled Spirits, Form 8906, and Mine Rescue Team Training, Form 8923. Also, Carbon Dioxide Sequestration, Form 8933. Some interesting credits found on this form. And also, the Qualified Plug-in Electric Drive Motor Vehicle Credit, Form 8936. Probably one of the more common credits you might see associated with this form. One of the general business credits that we need to take a look at is found on Form 8941. You may run into this somewhere in your tax preparation career. This is the credit for small employer health insurance premiums. For example, David Saverson owns a small business and pays $6,000 in insurance premiums for his 2 employees. Now this credit comes as a result of the Affordable Care Act. So under the Affordable Care Act, David is entitled to a tax credit. This Form 8941 flows to the Form 3800. The Form 3800 flows to line 54 on the 1040. And again, this particular taxpayer gets a credit for paying health insurance premiums as a small business employer. In summary, there are a few more non-refundable credits on the Form 1040. These include Retirement Savings Contribution Credit, sometimes called the Saver's Credit. This is a federal tax credit designed to encourage low and modest income individuals to save for retirement. This credit is claimed on Form 8880. The Child Tax Credit. For children under age 17 at the end of the tax year, a taxpayer can claim a $1,000 tax credit per child. The Residential Energy Credits. Taxpayers who upgrade their homes to improve energy efficiency or make use of renewable energy may be eligible for tax credits to offset some of the costs. We claim this credit by filing Form 5695 with the tax return. Form 3800 covers a series of general business credits. The general business credit is made up of a number of separate credits specifically included by law and can be just one or more than one of the many available credits. Each separate credit is computed on a form for that particular credit. Next, let's look at some review questions.